The US stock market is hitting all time highs, but this surge feels disconnected from reality, both domestically and globally. While the market's performance might suggest prosperity, it's happening against a backdrop of unresolved conflicts, public discontent, and missed opportunities for addressing critical priorities. This raises a crucial question. What does this dissonance between Wall Street and Main Street really mean? The United States is currently embroiled in a conflict entanglement that was expected to be resolved quickly, but has instead escalated. Attempts at brokering a ceasefire have failed, leaving the nation without a clear path forward. This lack of resolution has eroded public trust, and leaders have not effectively communicated any tangible direction to the American people. Despite this, the S&P 500 has skyrocketed, gaining over 600 points in just 11 sessions. This rapid upward movement is likened to bamboo growing in wetlands, a striking image of unchecked growth that feels out of place during such tumultuous times. Consider the tragic bombing that recently claimed the lives of 168 young children. The stock market's continued rally in the aftermath of such an event feels tone deaf, distasteful, and detached from the gravity of real world consequences. Similarly, the potential taxation of 20% of the world's oil passing through the Strait of Hormuz, a route that was toll free until February 28th, has not tempered the market's exuberance. The daily chart of the S&P even evokes the image of a student frantically raising their hand, waiting to be noticed, which underscores the market's inexplicable optimism amid chaos. One explanation for this market behavior could be the effort to prevent malicious actors from shorting American companies during times of instability. However, this strategy does little to address the larger picture. The fractured reputation of the United States, both at home and abroad, cannot be mended by a booming stock market. This isn't the way. The market cannot substitute for effective policy, nor can it repair the lack of a clear, achievable goal that resonates with the public. A poignant comparison is drawn to the aftermath of 9/11 when the stock market closed for 4 days as a gesture of collective mourning and respect. Today, the market's relentless climb amid unresolved conflicts and public dissatisfaction feels insensitive. It sends the wrong message, suggesting that financial performance can paper over deeper societal and geopolitical issues. Recent Pew data reveals that 60% of Americans disapprove of U.S. actions in Iran, a sentiment unlikely to change just because their stock portfolios might see gains. The allure of all-time highs has also diminished due to their frequency. The S&P has reached record levels twice in the past 6 months, making these milestones feel less significant. What exactly is being celebrated? Earnings season is just beginning, yet the market's performance seems disconnected from the broader context of long-term costs associated with Middle Eastern entanglements. This focus on international conflicts detracts from addressing urgent domestic priorities like artificial intelligence dominance, digital currency legitimacy, renewable energy, infrastructure, and healthcare. The selective closure of the Strait of Hormuz looms large as a global economic threat. Sending the U.S. Navy to the Middle East to pocket watch from the perimeter isn't a solution. If this critical passage remains blocked, it could trigger a worldwide recession, as noted by Citadel's Ken Griffin. This scenario not only jeopardizes the U.S. economy, but also provides Iran with a new revenue stream that didn't exist before February 28th. It also has created an opening for China to shift oil trade from the petrodollar to the petro-yuan, not overnight, but certainly over time. These developments highlight the unintended consequences of current policies and the strategic opportunities they afford America's adversaries. Domestically, the disconnect between Wall Street and Main Street is glaring. While the stock market thrives, many Americans are struggling with rising living costs, stagnant wages, and inadequate health care. The idea that a surging stock market can compensate for these challenges is fundamentally flawed. Even if the volatility index drops to historic lows, it does not make America look strong. Instead, it reveals vulnerabilities that adversaries could exploit. Ultimately, the stock market cannot carry the weight of unresolved policy issues. It cannot address the frustrations of Americans dealing with layoffs, inflation, and a lack of economic opportunity. The market's rise feels illogical and disconnected, a sentiment humorously captured in a recent Lego diss track from the IRGC critiquing the situation. The answer isn't to prop up the stock market, but to take meaningful action to address the real concerns of the American people. The current situation reflects a broader issue: the inability of financial markets to substitute for effective governance and policy. The stock market's performance might be green, but it cannot mask the red flags of unresolved conflicts, domestic struggles, and missed opportunities for innovation and growth. The disconnect between Wall Street and Main Street only underscores the urgent need for leadership that prioritizes the well being of the nation over the optics of market performance.